Hello everyone, welcome to the Ichimoku Charts.com daily analysis for light through crude oil for Tuesday, October 23rd, 2012. Well, quite a significant chart for light sweet crude oil, and here we now have the market trading down below the cloud. Previous trading we had the market break out in a bullish manner up above the cloud, and then trading within the cloud for quite some time, for about a month or so. The market found support down around the bottom of the cloud, traded up to near the top of the cloud and found resistance, and at various times we've found support and resistance within the cloud. 3 trading periods ago we saw the market break out in a bearish manner down below the cloud, gave us a sell signal, and it has turned out to be quite a strong signal. That was around the 90.51 level, and now we see the market trading down around the 86 level. Very bearish trading, 3 large black-bodied candles. Today we've had an extension of the downside momentum, a very large black body, larger than the previous 2 trading periods, and it does suggest that the sellers, as I've said, have built some very solid downside momentum, with the sellers closing with strong control and showing some strong commitment, taking this market lower. We do have very solid support, however, down through a zone down to the 83-85 level, and it wouldn't surprise to see some buying coming in now. This market is looking a little bit overextended in the short-term time frame, but this large zone could hold up anywhere down to there. Previously it was a very large area of support and resistance, and the significant level down around here is the 83-85 level, and we could end up seeing the market trade down to there in one go because of these large range days, very volatile trading to the downside, so that wouldn't surprise to see the market test down to those levels. In terms of the Fibonacci extension, today we've seen the market trade in a very bearish manner down through the 161.8% level at 87.23, and we have now a target down to the 261.8% level at 83.36. In terms of the Fibonacci retracement, which is now in an expansive mode, we've traded down below the 161.8% level once again in a bearish manner. Target at the 261.8% level at 83.80 coincides with the target roughly for the previous Fibonacci technique, and of course those targets coincide roughly with down around the bottom of this 83-85 level that I've already mentioned. Now, in terms of Ichimoku, bearish market in all 3 time frames. The market's trading below the cloud, obviously, as I've discussed, so we have a bearish market in the long-term time frame, but the market's also bearish in the medium and fast-term time frames by trading below the Kijun-sen and the Tenkan-sen. The Kijun-sen and the Tenkan-sen are both pointing down quite sharply, and that's reflecting the solid downside momentum that we've seen from the sellers over the previous few trading days. So bearishness in all 3 time frames. The Chica span here is below the corresponding price action, so it's confirming the negativity that we've seen in the previous 3 days or so, and it does suggest that there is a strong potential for the market to test to lower levels. The strong potential for the market to test to the 83-85 level, but potentially find some solid support down roughly around that area. So for the next day's trading, let's watch the low of this current candle. Let's watch for a test down to the 83-85 level roughly. If we see buying coming in, there is a potential for the market to test back up to the upside. The market is looking a little overextended at the moment. Certainly will look majorly overextended if we do test down to those levels, and a bounce like a rubber band wouldn't really surprise.